Hey traders and investors, it's Serge Berger here. What I want to do today is look at two stocks that I'm looking at buying uh, right here, right now, after they have developed some really bullish looking patterns and just generally held up very well. One of them is a company called HCA Holdings. It's ticker symbol HCA. It's one of the larger hospital operators in the US, and what we're seeing first of all is a stock that had really very much remains trending higher off its 2011 lows, very much like the broader stock market. So for one, that's what's going well for the stock. More importantly, the stock reported its earnings here, I believe 2 weeks ago, and all it has done is moved lower to its 100-day moving average. Okay, that's this blue line. So if I take this arrow here, maybe you can see this a little bit better. Make this a little bit bigger, and you can see the stock moved into an important support area here. And the very next day, on February 5th, also gave us another long tail. Okay, see these long legs, long tails at the end of these candlesticks. Those are very important. And then finally yesterday, on Monday, February 10th, it gave us a meaningful follow-through buying day. So if you look at this from a psychological point of view, you can see that the bears capitulated down here. They couldn't. They failed to hold the stock lower. 2 days in a row, the bears would come back in intraday and buy the stock back up. So there's support down here, okay? So what this means from an investing point of view and from a trading point of view, okay, it really means that if and when the stock were to drop below this area, let's call it $46.50, $47 area, okay, coinciding with the 100-day moving average, which is really the consolidation period that the stock went through in December, okay? If it were to drop through there, you definitely want to get out. In the meantime, however, the stock has held support and continues to move higher. So this is a really good stock where you have very clearly defined risk. Okay, so that's the beautiful thing about using candlesticks in conjunction with other, areas of interest, technical indicators, and things like that. The other stock I want to look at is PBI. Okay, it's the Pitney Bowes, a fairly boring business of making mailing equipment. But you can see the stock is acting very well. Okay, the stock gapped up here on the 30th of January, past a new multi-month resistance area, back above its 50-day moving average, and again, very bullish action in terms of the candlesticks as well. It doesn't take a genius to see that this is a very strong buying day here. That on the day of the breakout past this resistance area. Now, however, the stock is also forming another tight area here like this, and you can see eventually if the stock were to break above, say, $25.60 or something like that, you start having a stock that's really been coiling up, acting well, systematically moving higher, and gives you, again, very defined risk. If it were to drop out of this consolidation area, maybe below 24.50 or something like that, you certainly have a stock you would want to get out of. So those are two stocks I'm looking at right now from alongside. Hope it makes sense. Take care.